Good day and welcome to BRICS Business Show, the program where we explore the ideas, policies, investments, and innovations shaping the future of trade industry and economic development across BRICS nations and the wider global south. I'm Ayanda Holo. As the global economy undergoes a profound transformation, nations are rethinking supply chains, financial systems, investment partnerships, and the rules that govern international trade. Against this backdrop, South Africa's business leaders, policymakers, economists, financial experts recently gathered in Sandton for the strategic dialogue hosted by the South African chapter of the BRICS Business Council. The objective was clear: to develop recommendations that will help shape South Africa's contribution to the upcoming engagements of BRICS that will be held in India. The upcoming BRICS engagements under India's chairship and strengthening cooperation across BRICS family. Today we are joined by the CEO of Garuda Capital, Professor Pillay, who was also part of the participants and presenters at this BRICS Business Council consultative session today on the path and the road to India. So today you'll be telling us more of what is it that they're presenting to India, BRICS 2026. Professor Pillay, welcome to BRICS Africa Channel.
Thank you very much.
Please take us through. What was the mood today, and what do you think you can share the insights of what you believe will be the best package that you're taking to India?
Well, we've got a lot of work to do regarding BRICS in South Africa. There's a bit more education to be done, a bit more ground level discussions to be done. But essentially, we're very happy to be part of BRICS. It's a big opportunity for the country, it's a big opportunity for the continent, because South Africa is representing Africa into BRICS. So when we go to India, we're hoping that we could facilitate more trade, less friction, less barriers, and easier communication. So that's the whole objective. It's a big gathering in Delhi later this year, but we're hoping to take a good delegation from South Africa with the objective of getting South Africa into the mainstream of those economies, because we are probably the smallest economy in the BRICS group of countries. We've got some real giants like Russia and China and India, really big. I mean, both China and India have got 1.4 billion people each. So that's 2.8 billion people. And South Africa, for example, has only got 60. So you can see that the size of the economies are very, very different. And what we're hoping for is that these markets with those large numbers of people can buy more of our exports, because economic growth and job creation can only come from exports. So if the big countries in the world are China and India, with the big populations, their demand for everything is huge. And South Africa is in a position to supply. We haven't done this previously, because previously under the old regime in South Africa, we were more Western looking than Eastern looking. And it so happens that the basic fundamental global demand of virtually every commodity you want to talk about is either from China or from India. So if it's steel, if it's coal, the biggest buyers of gold on the planet are India. The biggest buyers of diamonds in the world is China. So those are the markets that we need to take care of. And previously, South Africa did it via London, for example. You will sell to India via London, or you sell diamonds to the central selling organization in De Beers in London for you to go to China. But now we can go straight to China. So we are beginning to understand in South Africa, the business people in South Africa are needing to understand and beginning to understand that the trade is with Asia, because the populations are there. So now we know where the market is, but there's some what we call friction in between to prevent that trade from happening so easily or so effectively as we'd like to see it. So in my subcommittee in particular, which is the payments subcommittee, deals with trade flows, trade finance to make trade happen. And one of the things that we want to be able to do is try and assist countries to work with bilateral currencies. That means in their own local currencies, rather than going via a third currency, which has been the practice. Now, that in itself reduces what we call friction. It reduces the cost of a transaction. So in this morning session, for example, we had the CEO of Axis Bank, and he told us that to open an LC in the normal fashion between three parties can cost up to 12-15%. But if it's bilateral, it's 5%. So that's the disparity of what we call excess costs in the same transaction. So we believe that if we can follow the market and make the financing into the market more receptive and easier and fewer barriers and fewer hurdles, then the trade will happen more naturally. So I think South Africa is very well positioned in terms of being part of the collective and being able to service those markets. So for us, we are of the opinion that we can increase South African growth by increasing trade. And if you increase South African growth, means you increase South African employment. And that's going to benefit all ordinary citizens through better standard of living, more employment, more disposable income. And to us, it makes a lot of sense.
When I look at some of the UN trade reports, they report that BRICS has been growing and the intra-trade within BRICS has been growing, but mostly amongst the giant members of BRICS. What can you allude to these frictions or these bottlenecks that keep South Africa? Because surely after 15 years
Yes.
of been looking at this potential, to me, I ask myself, what is it that South Africa is not doing to realize this potential?
It's a very good question. So thank you for that. The first one is what we call geographical proximity. So those people who are close together trade with each other, but they're far away. So for us to get to those markets requires logistics, entry port, harbors, this, that, and the other. So we're trying to get all those infrastructure in place. That's on the one side. But the more difficult thing to understand is that our people in South Africa, we're not looking at them being our natural trading partners. When I was growing up in South Africa, in the old days, the only trade could happen could be with Western countries. If you're an exporter, you'd export to the US, for example, not to China.
Sure.
Or not to India. But now,
Sure.
that's where the movement is. So you're quite absolutely correct. The intra-BRICS trade has been very low. In South Africa's case, it's because of two things. It's because of logistics, which is one, but more specifically, spotting the opportunity and realizing if you're going to export, you export around the world, not just to Europe. And in particular, Europe and the United States have gone what we call ex-growth. So there's nothing fancy happening in those economies.
But do you think around closer to your portfolio, discussing the payment systems and the policy alignment, is it in harmony or where are you at?
So the policies are not in alignment because each country has got sovereign jurisdiction, sovereign policies, trade policies, etc., etc. And it's only recently now that an attempt has come to coordinate those kind of things. So there's more and more efforts now to bring this particular block more together. Previously, they all had the same problems that South Africa had. If there had to be an export in India, you say, where are you exporting? It has to be to the US. Now they say, no, I'm exporting to China, which is right, your neighbor next door.
Sure.
So I don't know if it's colonial issues lingering around or what, but the fact of the matter is that the biggest demand in the world for anything, to give you an example, the biggest market for Rolls Royces is in China. So Rolls Royce doesn't make money in the UK. That's where they're from. They make money in China.
Sure.
So why shouldn't our South African companies also go to China or go to India? That's where the market is.
Well, the Chinese have made it zero tariffs. Do you think the entrepreneurs that were in the room today are taking up that opportunity?
Yeah, I was saying earlier, trade has got to do with competitiveness. Tariffs and barriers are a small impediment on the way. But to do the trade, you've got to be fundamentally competitive. The Indians and the Chinese are very clever people and they're very astute business people. So they want two things. They want lowest price and best quality. That's competitiveness. It actually doesn't matter where it comes from. If we, and that's a challenge for South Africans, if we can get that competition right, and we are fundamentally competitive, globally competitive, in just one commodity or two commodities, the entire country can really benefit. So this thing around tariffs and barriers is a side issue, which makes it either more attractive or less attractive. But the baseline case must be that you're competitive in the first instance.
And does South Africa have the environment to take up the opportunity to be competitive and sell more to India?
We do have the ability, but only in selective industries. In most of the manufacturing type industries, we can't compete with China or in India simply because the law of economics says that if you produce 1,000 units, the cost per unit will be cheaper than if you produce 100 units. So that is the situation. In South Africa, our market is 60 million people. In China, it's 1.4 billion. So you can imagine if you're selling toothbrushes, if you have the price of toothbrush based on 60 million or 1.4 billion, your cost will come down quite exponentially. So that is the mistake that I'm saying the South African trade industry are not seeing. They're pricing for a domestic market which is small. They should actually be pricing on a global market, which could be 10 times the size of the South African market on any given commodity. As soon as we make that mental change, then we can say, yes, now we can compete. Because all of our projects will then be put up for not 60 million people, but for 100 million people. Or even if we take South Africa into Africa, let's not look far across the seas, in the same continent. If we say we're producing motor vehicles for 60 million people in South Africa, we may as well do it for Africa and say you're producing motor vehicles for 1.4 billion.
Yeah, which has been the criticism of other BRICS nations that whenever the president is visiting them, he's dragging along small businesses that can't produce anything for their markets. So who was in the room this time? Was it corporate South Africa, or you still have this take everybody with, even though the person, as you say, that they won't be able to?
I'm pleased that it was a mix of, it's a mix of people, some academics, some intellectual people, some business people, some people involved in trade and industry and in banking. So I think we're getting the message across. And it's real sector economy. So my hope is that when we go to India, we would have got everybody onto the same wavelength to say, actually, now it's a bigger world. It's not a small little place. It's a bigger world. And our entry into BRICS happens to be extremely positive for us and fortuitous for us if we spot the opportunities. And as I said previously, South African industry never took advantage of it. So now we're doing lots of things with China, with India, in our particular business in terms of Garuda Capital. All the investment a lot of the investment that comes out of China into South Africa, or India into South Africa, comes via Garuda Capital. So we have a natural bridge to the Chinese and to the Indians, and that's where we've positioned ourselves.
And do you have any projects that you're investing to really capitalize in those markets? As I said, Chinese are complaining, not complaining, but they always talk about, why are you bringing us workshops when we want? we have sectors to fill,
Yes.
but South Africa tends to bring really into their books investments or investors that are really too small to even consider.
Correct.
What's new that, or maybe through your capital investment company, what investments or sort of investments are you looking for into really taking up those opportunities?
Yeah, you see, I mean, I can give you a couple of examples where South African industries have gone to India, for example. Now, what has happened is that to go to a market like India or China, you have to have a proven product, which is already tried and tested. So if it works in your market, those markets are more demanding and they are more price sensitive. But if you can do it here with quality and with good cost control, you can have the same effect over there. So we have a number of South African companies, and it's not known, who have, I mean, if you take, for example, the largest company in South Africa now is National Affairs. National Affairs is not because of South Africa, it's because of the investment in China. So many years back, National Affairs was not the number one company. It's because of their investment in China, in Tencent, that it's now the biggest. So a lot of the industries, I think, in 10 years' time from now, when they've grown and fed this large animal, they will grow accordingly. So they'll get even bigger. So it's a trend that we can't miss. That's the point I'm making. It's a grouping that we can't ignore. So just with China and India alone, it's 2.8 billion, 3 billion people. It's about 40-50% of the global population. What other market do you need?
Sure.
And also, if you go to, also then there's currency effects. If you go to Japan, Japan is too expensive. If you go to the other side, to the US, it's too far away. So this is relatively in our trading corridor. So with the right orientation, we can get into those markets.
If we map it forward and say India BRICS 2026 was a success, what does that picture look like to you?
Well, that picture will look like if we have more trade deals. If, for example, we can get South African sugar into China, for example, or South African wines into India, which we should do if we've got even a little bit of marketing skill. Because the largest market on the globe for spirits and alcohol is actually in India. There was a company in the UK which was failing called Diageo. They were failing. All they did was they bought an Indian company and they pushed their products through. So it makes sense that, if you take the US, for example, people always talk about the US and they talk about India. But the largest middle class population on the globe is in India, not in the US. So that there are 250 million Indians who are middle class. I'm not talking, we all know India as being very poor, but the largest middle class population on the planet is in India. So if you're talking about certain high value commodities or interesting exports, that could be your market.
Sure. Professor Pillay, thank you for joining us on BRICS Africa channel.
Thank you. I hope it's going to be a good story 2026. Yeah.
Thank you so much.
Thank you, sir.